Everybody, this is Jim at freechartvideos.com using time-honored techniques to understand modern markets, or at least we try to. This video is for education. Let me try that again. This video is for educational purposes only, and it is not intended to be used as any form of investment advice. I can draw lines on charts, but you, and only you, can draw your own conclusions from your own due diligence and make investment decisions that are suitable for your financial situation. Even if I knew what your financial situation was, I got no business making up your mind, so I don't pretend to. And I'm not even qualified to, because I'm not a licensed professional. I'm just a guy that draws lines on charts. Let's look at the ugly S&P 500. Okay, here we are looking at an hourly chart where each candle is an hour, and today was an ugly mess. I'll be honest with you, completely caught me by surprise. There were some other fairly high-profile analysts who were completely caught by surprise as well. One calling for just flat out an up day today, and boy, it was big down. But we need to look at the broad picture to know when to panic, when not to panic, because a lot of times you get shaken out, and you get shaken out at a time when really you should be a buyer. So with that said, I confess today I stopped out of 2 trades for small losses, but both of them, I was bottom fishing here, and I failed to find the bottom. It kept looking like it was going to get put in, and then another wave of selling would take it back down. So, but as we look at the past few months of trading, you can see that in at least as we look at what I would call fairly major bottoms, which one we had back in March, and we had another one back in mid-April. We are still above those levels, but you know what I don't like is the fact that even though we're above those levels, we are below that trend line. Now keep in mind that that means, this market could reverse and follow that trend line up, staying under it, and make comfortable gains from here. There have been many a bear who has been caught thinking, now that that trend is broken, I'm going short. And then they find out that no, we just kind of, as I've said in the past, the market's just kind of changed lanes. So what I thought was going to happen with that break yesterday out of this bull flag, I thought we were smooth sailing. We would test this line, and then if we break that line, then we move up. Instead, we start the day and we come back into this bull flag. Now the question, the $64,000 question is this simply a return to this pattern for another tag on this line, or maybe for a bounce at the lows that were set back, or what day was that? Last week. Is that what happened? I cannot talk today. Is that what is going on? I cannot answer that question for you. I could tell you that looking at the chart, you've got gap support from here. See, that was perfect support there. Didn't quite reach that today. I suspect that will be tested tomorrow unless something fundamentally changes overnight, and that's possible. But I'm thinking that there's still going to be downward pressure tomorrow. You just don't make that long of a nasty red candle without some follow through. So what is this line right here? Well, let's make it a different color. Let's make it red as well. And if we back out from this chart, you will see that that line is what I'm considering something of a line in the sand. As long as we're above this line, I'm not really worried. I'm concerned, but not worried. and we are still above that line. That is the 3.9 bottom. The next low to hit, which was actually the low was here, but we went sideways and kind of extended out to the right. So right now I'm saying if that line breaks, then it's probably time to step back from the markets and say, okay, let's not make any rash decisions with long positions on this dip, because this is taking out a line that should provide pretty strong support. So that's what's going on with the S&P 500. I tell you what, let's go ahead and take a look at the other indexes real quickly. Okay, here's what's interesting is the NASDAQ back tested this line. And that's where the selling in the NASDAQ stopped. And look how deep that was, 2.3%. So that kind of makes sense. You know, that's the kind of move to where you think we should find support here, and from this point on, I believe the markets will rally. But that's the NASDAQ. The S&P doesn't look that sweet. Let's look at the Dow. The Dow, on the other hand, tagged this line that we showed you in the S&P, and that looks pretty ugly. As a matter of fact, it looks like it may have just violated that, maybe by a hair. So that does not look good. So it looks like this may have been a false breakout here in the Dow, but let's see if it bounces. You know, let's see what happens tomorrow in the Dow Industrials. And then if we look at the transports, I think, okay, looking at a really long-term chart of the Dow transport average, you see where this high that was set back in 2008, we reached that not that long ago, and it looks like that's getting turned back pretty good. If we draw that same line in the Dow transports that we have drawn in the other indexes, then you can see that the Dow transports are down below that line, but they did it back here and recovered. So to me, this looks like by far the weakest. So all I can say is right now is this is a warning shot across the bow. You know, things look great, things look good, and then I think this was probably somewhat, I don't want to say that this was due to the actions of Congress, but you know, they refused to increase the debt ceiling, and apparently that sent the markets into something of a tizzy. And that's fine, whatever. You know, I'll be honest with you. If the country can get fixed, and I lose a little bit of money in the markets, I'd rather have a country that's fixed. So here's the deal. I'm thinking we probably in the Dow transports. Wouldn't it be nice if we got a huge inverted head and shoulders out of this? Maybe come back down to the 4,500 level, 4,400, then come back and take that line out. That would be a good buy signal if you ask me. But we're dealing with what we're dealing with right now, and that is an S&P and broader indexes that gave up more than 2% today, and that warrants a very close watch. And maybe even taking a look at your stocks, and if you got some individual stocks that might rally where they broke down today, I may look at getting out of some things with small gains, with small losses, and but basically it's better to live to fight another day than to be blindsided by the kind of action we had today. 2 days in a row. So let's see what happens tomorrow. I almost forgot the Russell. Here we go. There you go. I'll let you figure that out for yourself. It looks like the Russell made an all-time high, but just by a smidgen, and then bounced off that line today. So again, that would be a nice buy signal. And do we call this a neckline of an inverted head and shoulders pattern in the Russell? I've thought about it, but I'm not sure. So, but that's still a good ways down. And but however, you can see that the Russell has not broken or even really come that close to breaking this line that we've pointed out in some of the other indexes. So look, hopefully tomorrow we'll get a little bit more clarity, but we're very near very important support. And you know, one of these days, you know, it's got to turn around and head down the other way. Is this it? We shall soon know. Look, thanks for watching the video. I wish I could point something out to you that's a little bit more clear-cut and that has a little bit more of, shall we say, a little bit better news. But I think today tells us we need to watch very carefully and be nimble. So look, take care. I'll have another video probably tomorrow. I'll be on the road. I'll see if I can get one done. I may not. It may have to wait till the day after tomorrow, which would be Friday. But anyway, take care. Thanks for watching.